Google stock has been one of the strongest stocks, American stocks of the past year, and that's exactly why I'm not buying it now. Okay, and I'm going to explain why. If you are thinking of chasing this Google stock rally on the monthly time frame, stop right there. In this video, I'm going to show you why price action and supply and demand at these levels over here say this move is already done, and why patience will save you money. Okay, so Google stock, as you already know, has delivered an impressive rally over the past year. Look at the strong move that started in April 2025, and then it's been rallying for over 6 months. And well, when this happens, this is what usually happens. Okay, as I demonstrated in many other videos, that for this analysis, and all of them are playing out as expected. All of them did this and then rallied. So I'm expecting this for Google stock too. So Google delivered an impressive rally, as I said. You can see that by yourself on the monthly time frame. This is the ticker, Google, and for the monthly time frame. These are very strong bullish monthly candlesticks, clean price action, and a lot of excitement from investors after breaking all-time highs, $208 per share. And this is usually where most traders make their biggest mistakes. In this analysis, I'm going to explain why Google shares right now goes directly against basic supply and demand rules, how the current monthly structure created down here at around $165, and what smart traders should be doing instead if they want to learn to trade stocks properly using price action and supply and demand. So this is not about opinions, this is about location, context, and patience, all these three things together. Okay, the big picture for Google stock, the monthly time frame. Okay, this is the context. Let's start where most traders don't, the monthly chart, because most of the time they are trading the smaller time frames, the daily, or well, usually even smaller because they are doing intraday. As you can see now in the 1 hour, we have smaller time frames. The smaller time frame we have like bearish impulse, new lows, new lows, new lows. This is a very large candlestick here in the first hour of the New York market for Wednesday, 17th of December 2025. This bullish gap from the 21st of November has already been filled and eliminated. So we have like bearish buys on the 1 hour time frame. Okay, now we're not gonna talk about the 1 hour. I'm just saying this is what we are expecting. Okay, we can see the new lows. Google has rallied aggressively for almost a year. Okay, printing strong bullish impulses with very little pullback on the smaller time frames. Here, those were the strongest pullbacks, like this one over here, this one over there, and there were pullbacks of about how much? 6-7%, nothing. Okay, nothing at all, no pullback at all, to be honest. And this kind of move is not random. It creates fresh imbalances on the bigger time frames, like this one here on the monthly time frame at 161. So this one is the most important one, together with the previous one that we are going to talk about now. So that monthly demand level was created, but very strong impulse, meaning institutions stepped in aggressively at that price, and that area is where demand is right now. Okay, so we as supply and demand traders, we buy at demand, not after demand has been created. After such an extended rally is the equivalent of walking, let's say, into a supermarket and buying the most expensive product after the discount is gone. It doesn't make sense. You know that. I mean, when you go to a supermarket and when you buy your favorite food or shoes or trousers or brand, you know you don't have to do that. But in trading, we become dummies. We look at the chart and it's like, now I'm going to buy now. Well, you don't buy after the discount price is over. Okay, so why buying Google stock right now is too aggressive in December 2025. This is where emotion destroys accounts. When price rallies hard, patience disappears, logic goes out of the window, and we shouldn't allow that to happen. From a supply and demand trading perspective, buying Google right now at price, Google price today is around $299 per share. So buying Google now makes no sense because price is too far away from the demand. It's overextended. Imagine like a spring stretched and just cannot hold it with your hands, and then you just need to let it go. Okay, so and then it snaps back to its original shape because you just cannot hold that tension with your hands. Okay, price is far away from the monthly imbalance. The reward to risk is completely distorted, and you are late, very late. If you haven't purchased shares of Google or used any other Google or stock strategies for this particular stock, Google, now until now you're late, very, very late. Okay, so strong bullish impulses must be digested. Okay, markets do not move in straight lines for never. Okay, they do this, they move like this. Okay, and if you want to really learn to trade stocks using price action supply and demand, you must accept this simple truth: the best trades feel boring. Trading should be boring, not exciting. Okay, I know that making money with trading is exciting, but that will kill your account. Okay, so what history tells us about Google stock without using fundamentals is that we shouldn't care about news, we shouldn't care about these earnings fundamentals. All of them have been positive in the last couple of years. The next one should be in January 2026, not February. And we shouldn't care about earnings, we shouldn't care about analyst upgrades because they are usually wrong. And everything is already priced in price action. Okay, so back in September 2024 here, we had this strong imbalance, which is not, look at this, as strong as this one. So this one was a rally of about 28%, and then price dropped 28%, and it played out that imbalance. Okay, that exactly. So look at this. This one is not 28%. Okay, this one is like 135%. So this one is even stronger. So this is Google stock is super overextended. So no matter which indicator or oscillator you use, or even price action or supply and demand, Google stock is overextended. Buying right now is a huge mistake. Very huge mistake. Could Google continue printing all-time highs? Of course. Okay, anything can happen in life. Okay, I could even transform into a woman. I mean, anything can happen. But in this case, I believe I am an expert in supply and demand analysis. Check the videos and you will see. And this is what we are expecting. Right? Maybe we'll stop right at the breakout spot here at around 207, and it will not drop farther. But we are expecting this. Okay, so buying after strong rally is not allowed. It is forbidden. It is a huge mistake. We should not buy shares of Google or CFDs for Google, or use bullish option strategies, stock strategies for Google stock right now. It's not allowed. Okay, and right now Google once again is overextended. So what makes more sense right now is if you already own Google shares or long positions from much lower prices, get out. Okay, get out, because you might, well, give away all your profits very easily. Okay, so if you don't own shares yet, this is not the moment to buy shares of Google. Okay, from a tactical trading perspective, selling opportunities are appearing now. Okay, bearish option strategies could start to make sense, and CFDs can be used if price action confirms weakness. Okay, that is advanced stocks trading strategy thinking, not hope-based investing. And remember, being early feels uncomfortable usually, and being late feels exciting and expensive. So the real edge is in waiting on supply and demand and knowing where price is. So when you look at the smaller time frames on the weekly, we have also overextension, but you can see rally base, and first stop is here. around $280 per share. From there we could have a rally, okay? Or what I'm expecting is that these lows will be broken and then price will create some bullish price action, rally it again, and from there drop again. That's what I'm expecting. But I don't know, that's what usually happens, as it happened, for example, on Meta. Okay, on Meta, I was expecting these lows to be broken. It happened. It created a new imbalance over the top and then dropped where? Right to the monthly demand level. Okay, so this is what I'm expecting in Google too. But this is like, I mean, if that happens, well, you can say, oh wow, he saw this happening. How could he know that? It's just supply and demand price action. That's how it usually happens. What usually happens, sorry. So the real edge is in waiting, as I said. On the weekly, we are expecting this. Hopefully, it will break these lows. If this lows is broken, this is going to happen, but not without pulling back. So until then, patience is the trade, the real trade. If you are serious about learning price action, supply and demand, and real stock trading strategies, this is exactly the discipline you must build. Okay, Google is a fantastic company. We all agree on that. Okay, that doesn't mean it is a good buy right now and always. Professional traders wait, retail traders chase the stock trades. Okay, you must choose your side. So let's see what happens with Google. But this is what happened in the past. We are expecting Google to replicate the exact movement, because not only was this one a strong demand level back in 2024, this one here is even stronger. So we should wait Google. Okay, and if this happens, this is a great moment to buy and hold Google for months. This will be a great opportunity. So we'll see. And the similar thing is happening on Apple. Okay, so we'll see if that happens. We'll see. But well, if you like the video, click on the like button, subscribe to my channel, and I will be helping you with other analysis. And somebody asked me to analyze this one, so this is what I'm doing. Have a great day.